What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit that subscribe button if you're brand new. And if you don't have that notification bell, hit that thing. Smash it. Nail it. Let's get rocking. Let's crush this thing. Thursday, another beautiful day in the neighborhood of cryptocurrency. Just wonderful times. Yeah, it's great. I love it. Now today, it's probably going to be a little shorter than usual. I have a splitting headache, but it's all about you guys. It's all about the content. We're going to get this thing fired up, dialed in, rocking out. So let's just do this. The first part going to be a little bit about what's going on, crypto, Bitcoin, kind of where we stand and the kind of imminence of where we are, so to speak. A little bit about the stock market, just because this is going to be a very important trend for Bitcoin. Overall market, what's going on. And honestly, there's so much just random garbage news out there right now that people can talk about, like not even FUD, but just worthless information that really doesn't matter to you, doesn't matter at all about you making good decisions or the trends of this market. So we're going to talk about a few pieces of news and then finally end with something to think about in terms of decisions being made, technical analysis, specifically the merits or the demerits of technical analysis. So short and sweet today. Hopefully it'll be good, helpful for many of you who love the shorter stuff. We're looking back at Bitcoin, and we see that this blue line, if you're listening on the podcast, this is the 20-week moving average. And originally, the thesis was that this was going to get up, hit this 20-week moving average, bounce off, and it didn't. It actually only made it about halfway up. And so what you realize when you look at the 12-week moving average, it actually hit it perfectly. Now, the 12-week is more of a shorter-term indicator, so you tend to use that if you were doing shorter-term trading. But it's very curious that it hit it on the daily. And as part of the exercise, many people would have 3 or 4 moving indicators. If you ever watch any other traders on YouTube or anywhere, you'll often see them having 5 or 6 moving indicators at once because you want to see where these all land. There's a lot that gets baked into the sentiment and what that all means. So while it didn't hit the 20, it did hit the 12, which means that this downward trend is actually spiking down faster than we thought, and it's also being traded on a shorter time frame. In my opinion, without any proof of this, that I've done it all, I think it's because a vast majority of what's going on right now is margin trading. And you can see that when you look at the volumes on Bitfinex and BitMEX specifically. Those two, the volumes are just astronomical compared to anything else versus something like a GDAX or a Gemini or a Kraken or anything of spot trading on the exchanges. So I think that plays a big part into how these curves work themselves out, especially in bear trends as we're watching unfold. So over the next few days, we could switch this out. What I would do is I would just add a second moving indicator of 12 weeks and keep that 20-week moving average, I should say, and keep an eye on these bars, because honestly, this triangle where this is all playing out over, I would say, the next 10 days, maybe even more than that, maybe like 12 days, give or take. This is really as they say, the rubber is going to hit the road. And, you got U.S. tax days coming up. I believe the UK taxes are in April as well. So we got that. There's $25 billion that need to be paid out. That's what I read. It was on a news article this morning. And just the way that the overall chart's going, which is really just a reflection of the overall sentiment, which is what we're going to talk about at the end. But I don't know. I think it's funny to read the comments on YouTube and on Twitter. Everyone's like, dude, I know you say it's either going to go up or it's going to go down. That's because I'm not trading anything, right? I think that there's a confusion. If you do a video every day, it means that you're trading every day. Like I've only traded, put down maybe 3 big trades in the last month when I started trading. Everything else is just practice. So I might trade $20 10 times a day just to learn to get better. But that's not like, I'm not doing that professionally. That's just to mess around. That's how I get better. And so every day I look at this and I try to evaluate, where do we stand? What am I learning? What are the indicators? And the only reason I say that is for anybody out there, if you are interested in this kind of stuff, if you are interested in technical analysis, it doesn't mean you're a day trader. It just means you can look at a chart, you can look at the news, you can look at CoinMarketCap, and you get a better understanding of what's going on. It's just a different way to look at what the whole ecosystem is. By no means does this mean that you should or should not be trading every minute, every day, going to the 5-minute chart and trying to trade that. I personally think that that's nuts. It's a good way to learn. It's a great way to lose all your money, especially if you're, new or using margin or anything like that. So that's why I think that this is going to be, we're going to, whatever happens. But I think over the next week, there's going to be some serious action, whether it be the downside or the upside. We're gonna go from there. Have a plan either way. If it dumps and you do not have a plan, you're gonna be more stressed out than you've ever been in your life. More importantly, if it pumps and you do not have a plan, you're gonna feel FOMO like you've never felt in your life. So it's getting to that point. Just make sure you have a plan. That's all I can say. Because as you guys know, none of this is professional advice. It's all entertainment purposes only. That's it. That's all we're doing here. Now, the other thing to keep in mind is the S&P 500. Now, remember, we were looking at this chart and it crossed this long-term trend line. It also crossed what is considered what is the 200 week moving average, which really got a lot of publicity, press, CNBC. It's kind of like what the death cross was for Bitcoin, the 200 moving average, because it shows long-term trends. It also potentially can trigger a lot of robo algorithms. But look at this. We zoom in. The S&P 500 is actually bouncing off pretty well, and it's showing a bit of resiliency. Now, if you scroll out and you look at this and you compare this to Bitcoin, it's got a big peak. It's got this second peak. It actually has 2 second peaks. And now we're actually showing a little bit more resilience. So this may end up being a stronger market than people think, the U.S. equities market, that is, which goes against everything that the media really wants you to believe, which is that the world is crumbling, the world is going to end. Now, I do think that there's a massive debt problem. I do think that there's a lot to be said about interest rates and currency and LIBOR and there's a million things that go into this. But if there is nothing else, it's actually a very good strategy to do the exact opposite of what you hear on CNBC. Now, don't quote me on that, but it is such a good proxy for what is not going to happen, is what they're saying on CNBC. So if everyone's saying the stock market's going to completely bomb, you don't always want to be a contrarian on that sense, but realize that usually they don't really know what they're doing. It means the price is already baked in, if it makes sense. All right. So the reason why that matters, the reason why I bring that up, not because anyone is necessarily investing in stocks, but this price may not be crashing anytime soon, which may be good for Bitcoin. If there's a lot of good bullish sentiment on the stock market, that may end up being very bullish for Bitcoin, because as far as we know, the bull run of stock market was very much conducive to the bull run of Bitcoin, because there's a lot of disposable income, a lot of positive sentiment. Bubbles tend to happen during and at the tail end of periods of prosperity. So when you look at history, at least, that's kind of when it happens, because there's all this extra money around. That's what happens. All right, let's do a quick refresh. And one thing we haven't really talked about in a while is our good friend Bitcoin dominance. And it's slowly creeping back up to 45%. This was one of the stories of 2018 that we've been talking about, continues to be one of the stories of 2018. And it also kind of represents the potential recovery of Bitcoin, but it does not necessarily signal the recovery of altcoins other than US dollar amounts. And that's a whole different discussion about whether you should be trading against Bitcoin or US dollars. Now, this is going to change probably sooner rather than later with fiat pairings as new exchanges and on-ramps. Robinhood is making some serious moves. They just allowed a bunch of new states to start trading. They're going to be a serious competitor to Coinbase in the coming years, coming months, I should say, especially as Gemini and Coinbase starting to raise their fees, especially for market orders, meaning you actually just go in and just buy something, which is what most retail investors do, as opposed to setting a limit order on something like GDAX, where you can, if you're a market maker, it's actually 0%, but if you're a market taker, you can pay 0.1% if you're just a market order period, which is a market taker, or a market maker without a limit order, the fees are going up. So Robinhood is 0%. That's a very attractive thing for people that are trading often. It's one of those disproportionate marketing things where low commission costs. I think E-Trade was the first people to do that in the 90s. They really figured out that if you do very, very cheap brokerage fees, the LTV of your customer, or cost per acquisition of the customer, dramatically drops, even the lifetime value. That's marketing talk for anybody who cares. So let's switch it over to BTC as we watch. Not a whole lot of crazy things happening other than our good friends Tron and Verge. Now, I do not own any Tron. I do not own any Verge, nor do I plan on owning either of these. But what I do think is interesting is that these two tend to be very good proxies for not necessarily what the market's going to do, but what the market is trying to do, right? It's like when either whales or bots or something or somebody or some entity is trying to create the chicken before the egg, or whatever you want to call it. I tend to look at Tron and Verge as the two that consistently get pumped as a way to get the flywheel going. And we're seeing Tron get pumped. Some random rumors flown around. Verge just got hacked, even though, guys, Verge is, it's literally a fork of Dogecoin that's got privacy on it. And it's being valued at, a ridiculous amount of money. I don't know. I can't stress this enough. Over the long term, the tactics fade, the fundamentals will win. Have your portfolio, have your money in coins that you believe in. And if you believe in those coins, good for you. I hope, if you end up proving everyone wrong, so be it. But it's not about the game, it's how the game plays you. Remember that. And if you don't know, if you don't know who the sucker is at the table, guess who the sucker is. But other than that, it's been a relatively predictable and inconsequential day. It's kind of same old. So that's what we're doing. Now let's talk about some more interesting news, in my opinion. CoinList, which is what do you call it? It's like a spin-off. It's a bad word, but it's like a spin-off of AngelList. So if you don't know, AngelList is a venture capital company, online company that kind of does crowdsource. There's lots to do syndicates. CoinList started their big first fundraise with Filecoin, raised massive amounts of money. It was the first real foray for VC to get into syndicates through ICOs. They CoinList just started doing their own funding. And the reason why this is important is because they are kind of not backtracking, but they are coming back and they're trying to do everything very, very by the book and very compliant. So that they're going to come out and say, we are doing this according to every possible regulation we know about. We are going to continue to do what we're doing, which is raise money for companies, like basically do an ICO platform for VCs, for accredited investors, potentially for unaccredited investors based on the Jobs Act. You can do small amounts. That's really what Republic is doing. But this is a big deal because it shows the existing world seeing the new frameworks available to them and then adapting to them, but still continuing to move forward. That's a big distinction, because often what happens with regulation is things get shut down and it kills not only price, it just kills innovation. But the fact that you see companies seeing regulation and saying, well, we can still move forward, let's just make sure we're doing it the right way, that's a good sign. That's bullish. I like that. It's really good to see this. It's not ideal, right? It's not necessarily, it is kind of eerily similar to venture capital, which I'm not sure is the best overall long-term solution for the average investor who's unaccredited. However, this is a move in the right direction. There's still progress being made, no matter how bearish and whatever the regulators may try to be. So I like this. This is good. I'm good buddies with the guys over at Republic. Same deal. They're being compliant. They're doing their thing, and they're moving forward because they see the potential of all this. They just have to go through some regulatory standpoint. So there's a lot of good stuff happening. Secondly, now on the other side of the spectrum, I always try to balance kind of bullish and bearish news, just because then it kind of evens out any sort of cognitive bias. I mean, that's cognitive bias. I mean, we all have that, myself included. I'm fully aware of that. But India, their central bank basically blocked any bank that is connected to the central bank from using or facilitating cryptocurrency. So what that means is that if you are registered with the central bank, you can know, and let's say you have what in the United States is called FDIC. So in India, let's say it's just like banking insurance. It's backed by the good faith of the U.S. government, or the Indian government, I should say. If you are part of that system, which all registered banks are, you cannot work with cryptocurrency related funds or anything like that. Now, the first thing, they didn't make it illegal. So it's not illegal to own crypto. It's not illegal to own Bitcoin, anything like that. It just means that they're trying to cut off the system, or they're trying to break the fiat to crypto, connection, the pathway. And while that does create some semblance of issues, I think history will show that this is actually just going to accelerate the process of how crypto is used and how it's moved around. I think that people may, instead if they can't use it in banks, they may use it for transactions, which, guess what? That's a great thing. That's what economies need. The velocity of money is what really helps to increase the value of any currency or any monetary system or any value-based system. You need velocity, which means you need money to exchange hands as often as possible. That's what can give value to money. So by no means is this a home run, but there's two parts to it. One, I think it's going to accelerate the potential transaction volume of Bitcoin. Hopefully, you never know. But on the other hand, it sets up a bigger macro trend, which is what we're seeing with national governments teeing up a situation where they create a sovereign a sovereign crypto, meaning it's an Indian-based cryptocurrency. So we're seeing this in other countries, like Venezuela obviously did it. Russia's thinking about doing it. There's plenty of other countries that are kind of looking into this. I believe Switzerland's looking into this. Now, India, clearly one of the biggest, with China, they are looking into this. If this ends up becoming what they do, there's a lot of implications to that. And that's something that down the road we'll get into. And it's going to legitimize the cryptocurrency world and blockchain and distributed ledgers. But it's going to change the way that geopolitics works, change the way money's worked, money's tracked. Privacy is going to be a big deal. And also, where money flows. Because as digital currencies, as nationalism increases, as we are seeing with things like trades and tariffs, the ability to control borders with money is going to be a very, very big deal. and the currencies that can move across those borders, things like potentially Bitcoin, maybe Monero, maybe others, I don't know, in my opinion, will grow in value. They always typically have, because people always value freedom and the ability to make their own individual choices in an international arena. So this is super interesting trend. And I give credit to Ari Paul, who, if you guys don't know, you should go follow him on Twitter. He's talked about this idea, of global markets that are global, a global ecosystem where different countries are more or less crypto friendly. And it starts with a sovereign crypto, and then it moves into what they allow in and out based on the blockchain transaction history. And he has a very interesting theory on that. He had an interview with Crypto Bobby you can check out, where he talks about it at the end, but it's just really cool. He's written some cool blog posts about it too. And I think that's a very, very interesting macro trend of all of this and as it affects it. Now, lastly, I thought this was super interesting. And first of all, I don't think that there's a right or wrong answer to this question. I posted this poll yesterday. Agree or disagree? Technical analysis is a self-fulfilling prophecy in crypto. Now, this came, one, because of my own personal experience, but also because I think this is a super interesting question. The first reason, I get so many comments on YouTube and Twitter. I mean, you guys see them all, that people are like, dude, you guys stop posting bearish charts, or you don't know what you're doing. You're making people make bad decisions, as if I have something to do with whatever. And the bigger picture being like, dude, if you just post bullish stuff all the time, it's going to get the price to go up, right? Again, the chicken and egg, which, whatever. There's something, because there's probably something to be said for that. Permabulls, you get enough of them, can help on a speculative market. But it really surprised me that 68% of people think or believe that technical analysis is a self-fulfilling prophecy. And here's why I think that this is such an interesting question, is that if it truly is a self-fulfilling prophecy, and it's this widely agreed that it's a self-fulfilling prophecy, why isn't everybody just doing what most chartists are talking about right now? Now, let me put this another way. Let's assume that a majority of the charts that we are all seeing on Twitter, YouTube, whatever, are bearish. It's going down. And no one knows exactly what the price is. 100 out of 100 chartists make mistakes. I probably make more mistakes than most people, as I openly admit, right? I'm learning how to do all this stuff. But if everybody's going bearish, and if 2/3 of people think the technical analysis is a self-fulfilling prophecy, why doesn't everybody just trade bearish? And you can say, well, I'm a holder, or I don't want to do this, or it's against my nature, whatever. But I think that's the bigger thing. And this gets into that book I was talking about with Nassim Taleb that I just read, called Skin in the Game, which is awesome. You should read that. Go to my Amazon store, coinmaster.com/store. That it's really interesting with this kind of stuff, because talk is one thing, but then actually going and being in the ring and following or doing your own technical analysis. I'm not saying it's harder or right or wrong. I'm just saying that you realize that technical analysis has nothing to do with price, in my opinion. All it does is it gives you an idea of what your decision could be. It gives you a probability set depending on what your TA looks like. The same way Twitter can give you a probability set, the same way YouTube video can give you a probability set, and then you make your own probability set, especially based on your own situation. How much money do you have in the bank? How much stress do you have in your life? What's happening at your job? What's happening with your student loans? Like, there's a million things, and technical analysis is just a visual representation that's easier to see and say that's bullish or bearish, more so than more of a gray science, like scrolling through Twitter or Telegram or Reddit for 20 minutes or whatever it may be. So I would encourage people to go check this out, look through the comments. I really appreciate everyone's comments, and I don't think that there's a right or a wrong answer here, because I think there's truth both ways. But what I do think is the big takeaway is that if you think crypto is manipulated, if you think that TA is causing the price to go down, whatever, if you truly believe that, you should be betting against crypto's price. And that's what I think is the real thing here, is that people say like, oh, TA is what's causing this to go down, but they're not actually going short against Bitcoin. Or they may say TA is causing the price to go up, but they're not going long because they're kind of apprehensive to do it. That's what skin in the game means. And when you make the leap to having skin in the game, to actually, here's my belief and here's proof that this is what I believe, that's when you start to realize that it's just a set of probabilities, and that's why they say trading and to a certain extent investing is so massively about the psychology. You can give the same person the same info, the same chart. 10 people will make 10 different decisions, different entries, different exits, different position sizes, different life, whatever. So always interesting to see these things. And again, I think that right or wrong, there is no right or wrong answer, but it's important to audit everything in that sense. There is no crystal ball. There is no golden ticket. There's nothing that will predict the future in any way. All you can do is increase your probabilities. With that, I'm going to go get some Advil, and I will see you guys tomorrow. All right. Hope you have a great day. Peace out.